Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng is down 0.5%. The Taiwanese index is below the flat line as well.
The entire mission was completed in 23 minutes, and this shows the strength of Indian technology.
11, 12, 15, 20 points now up on the Nifty.
Small caps have trailed, but partly also on account of commodities and metals.
This year, our performance of our core business has been exceedingly good.
5,000 plus 6,000 branches in Muthu. So people are there, the money is there, the requirement is there.
Trying to make a dash towards that 24,800. The sensex is now in the green, up nearly about 300 points.
$250 million per quarter should be the new base.
24,960, that is where the Nifty is at. The markets have made a roaring comeback.
Hello and welcome to Closing Bell. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me Rima Tendulkar and Nigel D'Souza. And guys, what a blooming green market.
Yeah.
Started out quiet. And I remember we said this, Nigel, in the morning, right? That you were talking about this, that sometimes slow and steady is okay. But the way these gains have gotten built on, I mean, we're looking at a 400 plus point rally on the Nifty. Oof.
It's complete domination by the bulls. The bulls have charged ahead. Forget 25,000 now. It's conquering even 25,100. It's a 1.7% rally for the day. And now look at the week. Remember, we started the week. Monday was this big blockbuster day. Then Tuesday, we retraced a bit. Yesterday, we consolidated. And today, we've added on another. And now, week today, the Nifty is up 4.5%. And the Midcap index is up 6%.
Well, that's right. A few factors that could have played out. One is the weekly expiry factor, because the positioning was such that we don't get past the 24,770 to around 24,800. That's got breached, and that's why post we got that past the 24,800, we had a quick 250-point rally, because now the those call writers, they've got squeezed out. That's point number one. Point number two is with regard to the flows. The cash balance or the liquid money available with mutual funds is actually at the highest in multiple years. I'm just working on that data. It's the highest that we've seen in multiple years, which is telling you domestic money is sitting at the sidelines waiting to get deployed. And with macros improving and hopefully earnings catch up as well, sitting on the sidelines may not be helping. So they'll be forced to get in, and that's what could push prices higher. And just one more thing, the FI flows haven't been that great so far this week. And there's that fear about the shift to China. But just going by the Nifty Bank rally today, it's up 700 points. The Nifty Bank has been doing a relative underperformance because of the high FI ownership in banking and financial names. Let's see whether or not we can get a relatively better FI number today because of this. So flows, the expiry related factor, and the Nifty Bank coming back to the party. I think, those could be the key cues today.
Midcaps have taken a bit of a backseat,
today.
right? Because in the start of the week, the midcaps were outperforming. But today, it's the large caps who've taken the lead.
Oh, absolutely. And I completely take Nigel's point. I think these are going to be two very important things that we'll watch out for. How much of this move is entirely led by short covering? And it seems a lot of that is because of the short covering phenomena. But if it's also backed by some FPI buying, because today, if you contrast, I was always looking at China last couple of days since that deal got announced with the US. Today, the Chinese market's cooled off. It's not like it's, moving on rockets or steroids. It's pretty okay. Let's pull up the final closing rate for the Hang Seng and the Shanghai markets. They have been kind of even Steven. In fact, there was a bit of correction in Hong Kong, about 0.8% lower. And the Chinese market is also down by about 0.7, 0.8%. So therefore, the hope is that FPIs will also know that, they need to spread their bets across perhaps both of these markets. Anyway, let's talk about what's worked. I mean, one no-brainer is defense. That index, the Nifty Defense Index, is up 10% this week. And we've not even closed the day, and there's tomorrow's session to go. So that's a very clear theme that's still working out. But other than that, it's total large cap domination, you'd have to say. And it's across the board large cap domination. Metals, for sure, are doing extremely well. So the likes of JSW Steel, for instance, up 4.5%. But beyond that, I mean, look at a stock like Hero Moto. Hero Moto is surging 6% as we speak. Then you have the biggies, Reliance, HDFC Bank and ICICI Bank. Together, they are pulling in plenty of those points out there. Actually, look at the market. If you pull up the Nifty heat map now, There is only one stock in red. That's the extent of today's move. It's so dominant in terms of the gainers. It's only IndusInd Bank. Other than that, 49 Nifty stocks in the green. Let's get the heat map if we can. It just kind of gives the sentiment of the day, and it's overwhelmingly positive.
And it's not that global cues are, supportive. You spoke about Asia, China, Hang Seng. Look at Europe right now. Frontline European indices are actually in the red, not losing a whole lot, down close to about 0.3%. But it's not that global cues today are supportive.
Well, that's right. Let's address, though, the sector that's been on fire for all of this week. Metal stocks, they are seeing strong gains all through the week. That's supported by a combination of factors. Macroeconomic as well as sector-specific tailwinds. Let's run it through the top reasons first. The announcement of a provisional trade agreement between the United States and China. That's improved global risk sentiment, encouraging flows into cyclicals and metals included as well. Next up, the positive commentary we got in from Tata Steel on demand outlook as well as on margin stability. That's what's added to a bit of a bullish sentiment, particularly in the steel segment of the ferrous space. Now, the broader markets have leaned towards risk on this week. That's what's benefited commodities as well as industrials. Now, a key driver of the rally is aluminium-related stocks. They have seen a sharp rebound because of the sharp rebound we have seen in alumina prices. Let me explain this to you. Reports suggest that Guinea is considering cancelling Emirates' global aluminium's mining license. Why is this important? Because EGA exported close to 10.8 million tons of bauxite in 2024. Now, around 10 million tons, 10.8 million tons will support roughly around 3.5 million tons of alumina production. Now, this potential disruption has raised fears of near-term alumina shortage. That's what's prompted some pre-buying and also some speculative positioning as well. Because of this, alumina prices have surged more than 10% from the lows that we saw in April 2024. Nalco, that's the one that's doing a relative outperformance. That stands to benefit because it derives a portion of its earnings from alumina sales, which could lift its margins in the near term. So risk on sentiment, macroeconomic tailwinds, as well as for Nalco, well, we've seen a big jump up actually in the last few trading sessions. Alumina, that corrected from around $750 per ton, came down to around $330 per ton. That's currently trading at around $370 per ton. Nalco sells alumina on the open market, while you have Hindalco, that's backward integrated. So alumina price increasing will help them. Vedanta could be the one that gets a little bit hurt because they buy some part of the alumina from the open market. So that explains why we are seeing Nalco do a relative outperformance.
Okay, all right, got that. So that explains the move on Nalco today. Aside of that, let's see what else. Tata Motors, Trent, HCL Tech, Eternal. It's pretty much, and by the way, a lot of auto stocks are having a good session today. It's not just Tata Motors, Bajaj Auto, Maruti, all of them on the upside as well. On the watch list in terms of specific mid-cap movers, Tilaknagar Industries is a stock that we're going to focus on in just a bit. And that's because of earnings. And look at the earnings reaction you've got. You heard the management commentary as well, sounding quite optimistic about their overall margin trajectory, what they're going to do in terms of volumes, sounding very, very optimistic. 14% up on that stock. Lee, Travenues, Tech, which is Ixigo, that, eClerx, Sanofi, these are some of the reactions to earnings that have worked very well. On the volumes charts, though, of course, overall the mid-cap index is, paling in comparison to the Nifty. The advanced decline ratio is positive. So just to talk about some of the names that are holding up quite okay. Once again, it's a bit of a PSU day. So Nalco, of course, Nigel spoke of. It has specific reasons around it. But look at BHEL, look at something like an Aerocon. These are names which are finding takers this afternoon. So looking pretty okay overall. Let's see if we can get to Nagaraj Shetty. I think he's joining in. We can discuss a couple of trading ideas. Nagaraj, good afternoon. If you can hear me. It's such a strong day for the large caps, and the Nifty is sailing past levels, 25,000 on the screen now. What are the next levels you're tracking, and what's the trading strategy?
Hi, good afternoon, Surabhi. Yes, indeed, the Nifty has witnessed a spectacular upside bounce from the lower levels in today's session. And having surpassed above the hurdle of around 25,000 odd levels, I'm expecting the next overhead upside target to be watched around 25,500, another 500 points in the short term, at least in the 7-8 sessions. And the overall chart pattern, broader markets are looking very positive at this point of time. I have two stocks from a large cap segment. First one I would like to mention as a Trent. Chartically, Trent was moving in a range bound action at the strong gap resistance over the last couple of weeks. Today, it has witnessed a decisive upside breakout of the hurdle range as well as the downsloping trend line, currently trading around 55.80, 55.90 levels. One can look to buy at this point of time. And 58.50 is going to be the upside target for the near term. And one can place a stop loss at 54.50. Second one is from the real estate side, DLF. Real estate was the underdog recently. It has not performed that much compared to the Nifty. And I think in the real estate front, DLF is the one looking very attractive at this point of time. Currently placed at the edge of upside breakout of the consolidation band, now trading around 709.50, somewhere around 710. One can look to buy at this point of time, and upside target would be around 750, which is in the short term, and one can place a stop loss at 690.
Jubilant FoodWorks, the expectation was that, given the strong numbers, industry-leading like-for-like growth at 12.1%, the company's plans to expand margins by 200 basis points over the next 3 years, the stock would do well, but in a strong day, Jubilant FoodWorks is down nearly 1.5%. Nagaraj, thank you very much for joining in. Deven Choksi is now with us on the show. Deven, first comment on Jubilant FoodWorks. What is it that's disappointed the street when it comes to the numbers? Because prima facie, it looked fine.
Yeah, good afternoon. Well, I believe that I think the numbers probably may look, I think, in the face of it, I think they look fine. Not completely sure till the time I read all the details about, I think, any internal numbers, I think, which probably have missed some of our attention. Market has definitely negatively reacted to an extent, but I would refrain from putting that any view at this point of time till the time properly going through the numbers.
Okay, all right. We'll talk more about this space in a bit. Deven, stay on. Good afternoon. We want to talk to you about the EMS space as well, and I'll tell you why, because this is probably the biggest story of the hour. It's coming in from none other than the US president, who else but Mr. Donald Trump. Let's actually see do we have Hormaz. I mean, this was a very big statement. Okay, I think Hormaz is going to join in just a bit. So what Mr. Donald Trump has said in Doha, I think today, is that he says he called up Tim Cook and told Tim Cook that he doesn't think that Apple should make in India for the US. He says India can take care of itself. Very, very, very important and sensitive statement coming in. Let's listen into the US president.
We have Apple, as you know, is coming in. And I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India, because India is one of the highest tariff nations in the world. It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff. So we go from the highest tariff, you couldn't do business in India. We're not even a top 30 in India because the tariff is so high, to a point where they have actually told us, I assume you too, Scott, you were working on that also, that there will be no tariff, right? Would you say that's a difference? They're the highest, and now they're saying no tariff. But I said to Tim, Tim, look, we've treated you really good. We put up with all the plants that you built in China for years. Now you got to build us. We're not interested in you building in India. India can take care of themselves. They're doing very well.
Wow, those are big statements from the US president. Two big statements actually there, not just one. He's saying, his claim is that India has offered to reduce tariffs to zero from being one of the highest tariff countries. He's saying India's going down to zero. That's his claim. And he was referring to Scott, that's Mr. Scott Bessent, checking if he's heard the same from India. And the second important statement, he's just announced it. He's told Tim Cook, don't make in India, only make in India for the Indian requirement. And the iPhones you plan to sell in India, do not make in India otherwise for the US. Hormaz. I'm speechless. But that's Mr. Trump, right? He usually leaves us Speechless.
It's something that the summary of what Donald Trump said is what you just mentioned, right? If you want to make in India for the Indian markets, great. Don't make it in India and send it to the US, because this is in very important context to what Tim Cook said during Apple's earnings call as well, which was just a couple of weeks earlier. And he had mentioned there very categorically that majority of the iPhones that will be sold in the US during the ongoing quarter will have India as their country of origin. Of course, he did not put a specific number to it, neither did he put a target as to where he sees that production going into by the end of the year. But he did mention that majority of these iPhones will be manufactured in India. But of course, you need to contextualize this simply because when Tim Cook made these remarks, the US and the China was still locked in this tariff war, which has only reached a temporary agreement earlier this week. So now what does Apple do with its strategy? That remains to be seen. And of course, it's not as if Apple has not committed any investments to the US. They did this long ago. Just 3 months earlier in February, they had announced that they'll be investing $500 billion in the US economy over the next 4 years. And that will be to expand their facilities in Michigan, Texas, California, Nevada, and a lot of other places. They are also planning to put up a new facility in Texas, invest in AI, set up an academy for in silicon engineering, and so on and so forth. So $500 billion already committed by Tim Cook for the US economy. Now, Apple does not work with any directly listed entities in India. This is what PL Capital told us last month. And they had mentioned that in case Apple does manage to increase its supply chain or its manufacturing in India, Dixon could be a potential beneficiary, although the company does not have any direct exposure to Apple just yet. Other than that, the Motherson Group had joined Apple supply chain last month. Not necessarily Samvardhana Motherson, but on a group level, they had joined Apple supply chain in August of last year. So as of now, things still hang in the balance. It will be interesting to see what Apple has to say on Donald Trump's remarks, whether they would still continue to manufacture in India and sell to the US. That remains a developing subject.
Thank you. Thank you very much for that. Deven, you want to quickly comment on this? As Subi pointed out, there are two sets of information that we are digesting. One, the possibility that tariffs to the US are now zero. That's what India has offered in terms of a trade deal. And secondly, no more Apple manufacturing in India, at least not make India as a manufacturing hub for exports. What does this mean for the entire EMS ecosystem? Because Apple was seen as this poster child that, if Apple comes to India and we can make Apple iPhones in India, then we're really setting the example.
Well, I think my common understanding, and I think the subject understanding says that when the cost of manufacturing and the economics, I think that we are talking about, the manufacturing economics that we are talking about, is working in favor of any part of the world, I think the companies do go to there, and I think they do it. EMS suppliers today, I think, are making a difference to the OEMs like Apple, wherein I think they're 30 to 40% cheaper compared to elsewhere where they manufacture the similar kind of a product. Now, if that is a kind of economic rationale that one is talking about, how easy or how difficult it would be for anybody to just switch off from one country to another country for manufacturing. It's not going to be so easy. So economic rationales will prevail upon. That's what my first point is. Having said that, I think most of the businesses basically are becoming extremely competitive globally. And India is among those countries where we are providing the most cost-efficient kind of a solution, be it in the area of logistic cost now, be it in the area of power cost, that is energy cost, and also now, I think along with that, the lower inflation, lower interest rate. So all in all put together, I think we become a really big challenger to any other part of the world as far as the cost economics is concerned. And that's where I believe and remain confident that things are not going to be easily shifted out of India, even if I think the statement comes from the President of America, for that matter.
All right. Hi, Deven. Good afternoon. Good to see you in. I am not sure whether you heard my take on the metal stocks. The macroeconomic situation is improving. There's a fear that could be a bit of a shortage on bauxite, which in turn will affect alumina prices and then in turn impact aluminum prices as well. Nalco is the one that has a direct relation to alumina sales. So that's why that stock has bounced back. I think it hit a low of around 140. Now it's at around 180. How would you play this and your preference between non-ferrous and ferrous?
So, Nigel, I think my point remains very clear here that I think given the kind of demand trajectory which is emerging into the global economy, be it in the area of ferrous or be it in the area of non-ferrous, I think the price of the metal commodity as a commodity is going to be on rise. Now, there may be shortage situation for raw material at one end. There may be, I think, the higher prices of the finished products on the other end. That's a reality. At the same time, I think the bigger advantage to a country like India would be, and the manufacturer in India would be, that we are blending the energy cost with the renewable and supplementing it, I think, along with the conventional energy. So that is basically giving us an advantage on the cost side, resulting into better margin. And on the other side, the demand scenario is going to remain upbeat hereafter. I believe that 6 months fast forward from now, probably we'll be seeing, I think, very strong capital commodity prices in the global economy. And that should work well for the argument of the stocks prices as well. So in my viewpoint, I think most of the stocks are getting into that situation wherein the conviction is coming up about the trend on the momentum side of the prices, which is going to result into the stock price surge also eventually. So remains relatively more confident than before as far as the metal outlook is concerned.
Okay, all right. So those are some of the names. Deven, give us your, earnings pick of the season. It could be mid-cap, it could be a large cap, but a stock that really stood out for you, where the numbers are good, where perhaps, it even warrants a fresh buy at this point.
So largely, I think in the financial space where we have found, I think, ourselves more comfortable in this particular earnings season, where the consistency is there. The Bajaj Finance and Bajaj Housing Finance, these two companies, I think they remain relatively more stronger pick comparatively. Two reasons. On one side, I think the higher amount of growth rate in the AUM which is taking place, which is allowing, I think, the 25-30% kind of a CAGR kind of a growth in housing finance business and 20-25% CAGR kind of a growth in the retail finance, the NBFC business of Bajaj Finance. So that gives you a good amount of visibility of 3.5 years, doubling the size from current levels. And at the same time, in the lower interest rate trajectory that we are experiencing and will be further experiencing, the NIMs are going to be better hereafter. So we find that I think these two companies would remain relatively more stronger, even on a forward outlook basis if one has to look at these companies. Otherwise, I think on a potential basis, we see the good amount of potential now returning back to metal stocks, which I talked a while back. Believe that I think 6 to 9 months from now on, probably I think we should be seeing a very different price picture of some of these metal stocks into the marketplace.
Deven, what about Muthoot Finance? Again, here the numbers were fine. Maybe the street doesn't like the guidance that they've shared. They're talking about a minimum 15% revenue growth to begin FY26 with, though they will revise it higher. They could look at revising it higher as the year progresses in Q2. But maybe it's the guidance which has disappointed the street. Also, there is that risk, right? If gold prices don't stay at these elevated levels, then can you continue to boast of the kind of growth rates that we've seen? Do you own Muthoot Finance? Is this a stock that you've liked? Because it's done well.
Yes, I think we have been refraining from buying into a pure focus gold finance NBFC companies into the portfolio, largely because of a variety of reasons about non-clarity on the subject of the valuations of the underlying commodities, gold in this case. So that's where probably I think we refrained all along, I think, in buying into the portfolio these kind of businesses. Whereas we remain more comfortable buying a stable business, which is a retail NBFC kind of franchises, which we spoke about a while back. Particularly in this case, I think the market concern, as I see it at this point of time, is going to be on the gold prices. And any inventory in pipeline or any inventory which is in working progress for manufacturing could possibly have some kind of a mark-to-market impact if the prices do not support current levels and go down further. So that is a concern which market is having, which is justifiably so. Otherwise, valuation-wise, I think that they are reasonably placed at this point of time. There is some amount of premium compared to what they were before.
Okay, all right. Deven, thank you very much for all the perspective and all the stocks that we've discussed today. Appreciate you joining in. You have a good rest of the day and we'll connect again soon. But for now, let's go back and revisit that big story that's coming out of the Middle East, where the US president has said that he's called up Tim Cook and he has told Tim Cook not to make in India when it comes to iPhones that are meant for the US markets. He's saying it's okay to make iPhones in India, which are for the local market, for the Indian market, but not otherwise. He says he's put up with Tim Cook or Apple manufacturing in China for many, many years. They should not now do the same in India as well. What does this mean for the entire Indian electronics manufacturing ecosystem and the monies and the investments that were already being put to work? Let's discuss this and get some perspective with Raju Goyal, Secretary General of ELCINA, which is the industry body of the electronics manufacturing fraternity. Mr. Goyal, thanks for joining in. That's quite a dramatic statement from the US president. I mean, it doesn't get clearer than that. I don't know how Apple, in the face of that, can continue with its plans on India, because the company was already on its way of scaling up its production in the country. Your thoughts?
Yes, I think this is actually quite a strong statement and quite unexpected coming from Mr. Trump. But I guess he has been like that for the last few months, and we should never really be surprised at what he comes up with. I don't know how things are going to work out, in the coming months. The most recent one has been that now, the tariffs have been lowered against China. So I believe now India and China are almost at par. So, there isn't, that much advantage that India has. But I still feel that I think India should maintain its path. We have a large, domestic market. We need to actually focus on more value addition. So what has been happening till now is that in the mobile phone industry, we have been doing a lot of work, assembling the phones. But I think we need to go deeper down into the value chain and do more of the components locally, develop our ecosystem, which actually requires very high-end manufacturing. So that is, I think, what we're going to do now. And we have the new electronic component manufacturing scheme, which is something that the industry and particularly ELCINA has been pursuing, I think, for the last almost 2 years now. And we are really happy to see it happen. So I would say that there is still a lot for us to do. Let us not get, disheartened by this. I'm sure, Mr. Trump might change his...
let's see what kind of response this gets from Apple. But, what does this do in the interim to the investments that have been put to work? Because, Apple has been working with Foxtron, with the Tatas, to scale up production. India was supposed to become Apple's biggest manufacturing base as it shifted away from China. Do you see that shift halting because of what we've heard today?
I think it is, it is too early for me to say something. I don't think I would really understand, the depth of this issue so much. It may slow down things a bit, but I really don't think that it is going to impact India that much, because we are still doing a very small share of the global market for Apple. So I think, and this is just a statement. I think let's see Mr. Tim Cook's response. He is the right person to really, respond on this issue. I do feel that it could give a bit of a hiccup, but I think India is on a very strong wicket in electronics, and we need not worry so much only about, one particular product, which is mobile phones. It is a major part of our manufacturing and exports, no doubt, but I think we need to focus more on the value addition. I would really not worry so much about it. That is what my opinion is, yeah.
All right. Got that point. Apple, I think at last count, sold 60 million phones in the US market, and 80% of those phones were made in China, and that's what it was looking to shift away from China towards India. Let's see how the story plays out. But thank you very much for joining in with that quick perspective. We'll take a break, come back and get you more on the markets in just a bit. We'll also have more perspective. Varun Goyal will join in on the market construct.
Welcome back. The Nifty is holding above that 25,000 mark. It's a 400-point uptick on the Nifty, while the sensex has seen a gain of close to about 1,200 points. Varun Goyal, Senior Fund Manager, Equity and Mirae Asset Investment Managers, is now with us on the show. Varun, thank you very much for joining in. We've seen the markets consolidate and now take off in today's trading session. In the last 1 month, what changes have has there been any change in your thought process? And have you made any changes to your portfolio? Any tweaks, any additions, any deletions?
Good afternoon, Reema. Thank you so much for having me on the show. I think broadly our view that there is a cyclical recovery in India, which is underway, is playing out quite well. Our sense was that we are looking at economic growth, which kind of bottomed out at 5.5% last year. It's seeing a cyclical recovery. I think the significant monetary easing that RBI is doing, along with the tax cuts and a good monsoon, should aid economic recovery in India. Of course, there are two external factors in terms of what happens to US tariff scenario and what happens to the geopolitical situation. But I think, and both seem to be much better placed today as compared to what the things were like last month. So I think broadly, the cyclical recovery is on track. We expect low double-digit to mid-double-digit kind of earnings growth for broader markets. And I think, markets definitely would respond to that strong earnings growth in the next 3 to 4 quarters. As far as our portfolio changes are concerned, I think we have added a little bit to IT. That sector has corrected significantly in the last couple of months. Other than that, I think the broader portfolio is largely intact.
All right. Hi, Varun. Good afternoon. Good to see you in. Varun, in terms of cash levels, how much are you all sitting on?
As a fund house, we don't take very big cash calls. I guess a couple of percentage points here and there. But we have been almost fully invested through the last few months.
All right. Varun, at the start of this year, we're only halfway through. And we've seen so many headwinds, and still the markets are up, I think, by around 4.5% or thereabouts. For the year, what kind of a return should we expect? And do you believe that after, the large caps actually have been getting bulk of the share, now if things are stabilizing, if Trump's tariffs are behind us, if the geopolitical scenario is better, do you think the mid and the small caps can do a relative outperformance, or would you stick to the large cap names?
Yeah, I think we've seen FY25 was a year with low single-digit kind of earnings growth, and the market returns were also broadly similar. I think fiscal 26 should be the year of cyclical recovery in India, and as I mentioned, we expect low to mid double-digit kind of earnings growth for the broader markets. And some of the small and the mid-cap names can actually deliver strong earnings growth. Our own internal assessment is that for the for FY26-27, we should expect somewhere between 20 to 25% kind of earnings growth for the small cap space as a whole. So I think this is a great year. Calendar year 25 should be a great year for bottom-up stock picking. I don't know how much return small cap will make this year, but broadly, I think if you look back at calendar year 25, 2 to 3 years down the line, one would think that it was a great year to create that high-quality small and mid-cap portfolio.
Okay. Varun, hi, good afternoon. Let's talk themes. What are you liking in the market right now? Where do you find, reasonable scope for growth and prices which are not too out of whack?
Yeah, good afternoon, Surbi. So I think we have seen several pockets of the market where the price damage has been quite disproportionate. I think some of the cyclical sectors like real estate, if we see 100 to 125 basis points of rate cut during the course of this year, that will definitely make your home loan payments, EMIs, more affordable. So we expect that the real estate cycle should continue for the next 2 to 3 years. So that is one sector we believe should do well. I think select capital goods stocks, which have again corrected 50, 60, 70%. So while there are, there were definitely pockets of froth where things have got, extended way too much. But I think selectively we should see value emerging in that space. And we are gradual, adding to some of those sectors. I think if you look at the whole rural consumption story, which has been at pause for almost 2-3 years, will come back. So our sense is this year we should see both discretionary and rural consumption making a comeback thanks to the tax cuts and the monetary easing that is currently under play. And also those are, again, one would find bottom-up opportunities in that sector too.
Okay. And just in terms of the portfolio bias, Varun, the split between mid, large and small, what would you go with at this point? I mean, as a blend across portfolios, what would the call be?
Yeah, I think so. I can talk about the FlexiCap fund, which I manage. That's where we are 2/3 large cap and 1/3 small and mid cap, and I think we are comfortable with that allocation at this point of time.
And I guess it's worked well for you because it's been the year of the large caps so far, and the Nifty now is just about, I think, 4.5% away from getting back to the all-time highs. Definitely outperforming the mid and small cap space. Good to have you on. Thanks, Varun, for joining in with that perspective on the show today. Well, that's thank you very much. Well, that's a word coming in from Mireille. But we have Page Industries numbers coming through. EBITDA is up 43%, and the margin has also improved. So looking good. Page Industries after, again, stocks like Jubilant, Page Industries, they're stars of yesteryears. And they completely fell off the radar in the last 2-3 years because of multiple reasons. And now we have seen a good show by both of them, and the stock is really reacting very well to that operational performance. We'll get the top line figure as well. I missed the top line. It'll flash on the screen. But the stock is definitely running away like a jockey, should I say.
Well, that's right. In fact, that margin number, if I saw it correctly, I think it was somewhere around 21%, which is a sharp improvement on a year-on-year basis compared with around 16.6%. But you need to note that in the previous 2 quarters, that's Q2 as well as Q3, they actually delivered 23% of margins. So on a sequential basis, actually, there's a bit of a dip. These numbers look good in terms of the growth on a year-on-year basis, but the margins actually have come down a little bit. We'll have to see what's the steady state. From those high teens, it had moved to around 23%, and in the past quarter, it's come in at around 21.5%. I think for the time being, the street is taking the absolute number as a positive, 40% up, and that's where the stock is up. But after going up close to around 2%, I think it's cooled off a little bit from the top. I'll tell you what, we'll slip into a short break. We'll come back. We'll have Nimesh who will be joining in. He'll tell us what he's picking up in terms of D-Street chatter. And also, we'll get in our technical picks. Stay with us. Welcome back. Well, we started the show by telling you that the metal stocks actually are doing well. But there's another sector actually that's doing well. In fact, a part of this sector, you have the two-wheeler makers that are doing pretty well. Sudarshan joins in to help us out with what's causing Hero MotoCorp. Sir, they have changed the gear, top gear, and revving the engine as we speak. Tell us more.
Looks like that. So just a month ago, Nifty Auto Index was at 52-week low. And from there, it has gained 23%. Now it's just 14% away from the record high. So most of the auto names are higher in today's trade, but I'll focus on two names which have announced results in the last 2 days. And the first in that list is Hero MotoCorp, which is top Nifty gainer, up more than 6% today. Now, why is it that? So yesterday, company held management analyst call after reporting a strong set of earnings. And in that call, the outlook that company has given looks very positive. Company is saying for the month of May and June, sales are going to be higher because of the number of marriage dates in 2025 will be more than 2024, and Hero Moto, being the leader in the entry-level segment, will be the biggest beneficiary. Also on the margin front, company is saying that it will continue to hold margin in the range of 14 to 16%, and it believes that recent income tax cut announced by government will also aid growth, and in FY25, it will outperform the industry. Now coming to Eicher Motors. So stock had opened in the green, but it had slipped to the red. Now again, it has recovered, now trading with gains. Now, why is it there? So Eicher also has talked about the outlook, and it's saying that, again, like Hero MotoCorp, it will also outperform the industry. And it's saying that while rural has been growing, it basically growing at a healthy rate, last month, in the month of April, the sales indicate that positive sentiment is returning in urban area also. In one segment where Eicher Motor is the leader is the segment that is above 250cc. In that one, company continues to gain the market share. Just if you look at in Q4, sequentially its market share has jumped by 100 basis points. And if you look at year on year, market share has jumped by 40 basis points. So overall, looking very positive for two-wheeler names after the earnings announced by Hero Moto and Eicher.
Thank you very much for that and explaining that. Nagaraj Shetty is now back with us. Nagaraj, any more stocks that you would have? Last 20 minutes to go to trade this up session.
Yeah, market has been in a strong uptrend. Nifty sustaining the gains. Even mid-cap, small-caps are also showing some strength in the upside momentum. I think we have some automobile two-wheeler space and metal space are buzzing in today's session. In two-wheeler, TVS Motor is the one was showing in a consolidation moment over the last 2 to 3 weeks, currently placed at the edge of upside breakout of the bullish flag kind of a pattern on technically. I think looking very strong, and I'm expecting this to move further with the upside breakout, and the next upside target would be around 2950 in the near term.
Okay, all right. Well, thanks a lot for that. Well, it's 3 p.m., so let's hop across to Nimesh. He's here to tell us about what he's picking up into D Street Chatter. Nimesh, what's the buzz today? Should we brace for a big institutional buy number?
Well, I'm not sure whether it's a very large buy number, but there is a buy number for sure, and the buy-sell ratio is close to 2:1. So clearly, 2 buy for a 1 sell. So that way, I guess the numbers will be positive. But I guess, today's move, Nigel, clearly has surprised me as well. I mean, nobody expected 400 points kind of a rally on the Nifty. I guess there is a bit of the weekly expiry element, which is getting played out today. But having said that, there is a bit of risk on as well. All the bad news, whether it's a tariff-related or war-related, seems to be behind now. So maybe that also explains that there is a bit of rally or a risk-on rally, so to speak, for the Indian markets. Within the sectors, you rightly pointed out, metals is one sector which has done well today. But even beyond metals, the rate sensitives is where there is a bit of buying traction as well. So real estate stocks have done well. They are well bid, and so are the bank stocks as well. The overall feedback is maybe the next leg of rally you will see in the PSU bank stocks, which has relatively underperformed the banking sector. So watch out for those in the days to come. Within the, again, there is, as I said, there is a lot of momentum in the broader markets now. But I guess today's big move seems to be, there is a bit of element of weekly expiry as well, which is spread out on the Nifty and the Bank Nifty.
Okay, and what about stocks, Nimesh? What have you picked up?
Well, Rima, in this kind of a market, you'll see a lot of buzz and rumors as well. So I need to be a bit careful, but the first stock on my list is VIP. After a long time, the stock has seen some bit of traction. The volumes are on the higher side. And again, there is a very strong buzz of some corporate development in VIP very soon. So, well, it's been in the works for a very long time. So, again, every now and then it does comes up. But looks like, there is some corporate development expected in VIP. And that's the reason why it's buzzing in trade. The second, a couple of stocks where there are some large blocks expected. I've been highlighting on a daily basis that. So, in today's list, it's Aptus Value, where there could be a large block. A PE could be a seller there. Ami Organics could be another stock where you'll see a large block. And third one is OneSource. The company reported the earnings yesterday. again, there the expectation is that maybe one PE investor will sell some stakes. So these are the stocks where you're going to expect large blocks. Third, couple of stocks, stocks where there is delivery-based buying, Indian Hotels and Sun Pharma. Both stands out in terms of aggressive buying or at least aggressive bids from larger FIs in today's market. And the last one is Bandhan Bank. The stock has recovered from the lows, but there has been a selling pressure from a very large long-only fund. There has been an official disclosure as well that they are looking to sell. They hold close to 9 crore shares. So that supply overhang is likely to be there in Bandhan Bank, at least in the near term.
Thank you very much for that. One of the big movers today is actually Tilaknagar Industries. Numbers were good. The company in Q4 reported a volume growth of 20% as the issues in Andhra Pradesh seem to be behind the company. But going ahead, the management guidance was also fairly upbeat. They're talking about high teens volume growth in FY26. They will maintain margins at 15.5% to 17%. They're investing a lot in advertising and promotion because they've got a lot of launches coming up, luxury launches in whiskey and brandy. But despite that, they will hold on to margins, and they're also planning to increase the contribution of the non-brandy segment from current 9% to up to 20%. Say by 2030. So stock is up close to about 15%. Listen in to an excerpt from that conversation that we had with the CMD Amit Dhanukar.
We have bounced back quite strongly in Q4 with the overall volume growth of 20%. Of course, the growth in Andhra Pradesh would be in excess of that. I think that's looking more like 30-35%. And, with this strong momentum build up in Q4, we're carrying this forward into Q1 and this fiscal year as well. I think the volume growth for this year will largely mirror, the Q4 volume growth. I think we expect clearly high teens volume growth for this entire year, and our revenue growth should roughly, track the same percentage. I think going forward, the NSR will, remain largely in the same range. I think while we do get the benefit of premiumization and selling some premium brands, but we did a price correction on our flagship brand in Andhra Pradesh in November. So, that was done in line with, the competitive movement in that category. So that price correction now we'll have the full year effect in this year. So, by and large, the NSR will remain same. And the margin outlook also, will be around 15.5 to 17%. That is the outlook which we expect for this financial year. We have few premium launches which we have already done. We launched Monarch, which was a luxury brandy in September of last year, and we intend to launch a luxury whiskey in the first half of this year. So, the premium brands, the first year, the advertising and marketing is going to be slightly skewed. So, with increased ANSP spends, that will put some downward pressure on the margin as well. The previous year, brandy as a percentage of our portfolio was closer to 95%. So we've made some progress in this year now where brandy is 91%. And, our vision is that, by 2030, which is say, 3-4 years from now, brandy will still continue, being the core of our business, but we expect it to be around 80% by 2030.
Okay, all right. So that was some commentary that came in from Tilaknagar today. The stock started off in the green. Well, I'll tell you what, it's currently holding at the high point of the day. Good numbers and good commentary as well on the path ahead. Amrish Baliga, our market expert, joins us on the show. Hi, Amrish. Good afternoon. Good to see you. Well, I've got a couple of stock questions for you. But before that, let me throw this one to you. What's that one stock that you'll recommend for our viewers?
My pick is Godrej Consumer. A prominent player in the FMCG space, focuses on personal care and home care segments. Second largest player in the soap segment in India. They have presence in about 85 countries across categories, and the major geographies are Africa, USA, Middle East, and Southeast Asia. But India still gives them 2/3 of their revenue. A home care segment is about 46%, and personal care is about 50% of the revenue. And they've recently launched a pet food segment, and I think this is one of the fastest growing segments in India. Godrej has adopted a volume-led growth strategy now, and there's a strong push for rural expansion and premiumization. And with the food inflation also coming down, I think the consumption should improve going ahead. And especially with the good monsoons, I think FMCG overall should do well, which includes Godrej. So expected revenue CAGR for the next 3 years is about 11%. With the PAT CAGR, I'm expecting about 21%. EPS for FY27 should be closer to about 28. And with this, my price target is about 1540.
Amrish, did you have a look at the news surrounding Persistent? That one of their top clients, United Health, that's facing a lot of headwinds. We know the stock price at after hours trading is down close to about 8-9%. But CEO is gone, they've withdrawn their guidance and now, facing a potential criminal investigation. What happens in such situations? If you own Persistent and one of their top clients is facing these headwinds, what's the advice?
See, whenever one of your top clients is facing headwinds, that's going to have an effect, at least in the short to medium term. So I think clearly that effect would be felt at least over the next 2 to 3 quarters, if not more. And one of those recent examples was Sirma. I mean, they also had one of the largest clients facing issues, and we have seen the sort of a correction. And this happens across. It's just not 1 or 2 stocks. I think it happens across whenever the issues like these come up. So someone who's possibly holding Persistent, I would say it could be a good time. Even now, it's not corrected too much. So I think it's time to book at least book partial profits.
Okay, all right. Amrish, I'm not sure whether you tracked this one, but VIP, it came out with its set of numbers. They were absolutely horrific, actually. The numbers didn't look good at all. In fact, I was mentioning to my colleagues in the studio yesterday at the start of trade, Surbhi, Prashant as well were there. I said that, going by the numbers, the stock should be down. But if we see a big recovery, means the street is expecting something more. Nimesh has told us that the street is speculating with regard to a corporate announcement.
Absolutely.
Now that could be the reason why the stock, I think, even in this, in the last 1 month or so, it's moved from 280 to 360 and it's moving on very, very large volumes. What's your view? Do you believe that things can only get better from here? That could be one point that's driving the stock. And the second point is, could there be a new owner? That's the other speculation, so to say.
Who's going to bag it?
Yeah, who's going to bag it?
Who's going to bag it? Sorry.
And it's still the leader with regard to market share. Good enough reason for you to buy? Or will you stay away and say, if I want to buy, rather play Safari that's been growing so well, margin improvement, Mr. Jatia at the helm has, turned things around. Your take.
No, see, if you see from a fundamental angle, there is no reason for you to buy VIP.
Correct.
Clearly, Safari has been doing consistently well, and VIP has been doing badly consistently. I mean, if you see the last at least 6 to 8 quarters. And I think with these sort of numbers, I think it becomes, like more the reason to find a buyer sooner than later. Because we've been hearing about this, a new promoter coming in. I think we've been hearing this for the last 12 to 15 months, if not more. So I think with these sort of numbers, it makes much more sense to possibly pare down on the expectations and possibly sell to a new owner. And I think that's what the street is now speculating. And because of which we have seen this sort of a move.
Okay. All right. Stay on, Amrish. We'll come back to you for more questions. Need to take a very quick break. As we take this break, let's get you a big global view as well on India. India is the most exciting market at this point in time. Those words are coming in from emerging market veteran investor Mark Mobius. Listen in to these excerpts. We'll come right back after the break.
China is not the only game in town. We're now seeing all these other countries entering the export market and being able to compete. So it's really very exciting to see what's happening around the world. And probably the most exciting place now is India, because India is going to be taking the place of China in many, many areas. And we've already seen companies like Apple and others come to India to manufacture and export. So India, Vietnam, Taiwan, Turkey, those are the ones that are looking very interesting for us at this stage. But as you pointed out, there are many other markets around the world that are doing better than the U.S. The big problem with India is bureaucracy. As you know, they inherited this incredible bureaucracy from the British, and the party that took over, the Congress Party took over, perpetuated that bureaucracy. But Modi, the new prime minister, has done a tremendous job in cutting through a lot of the bureaucracy, but still there's a lot to be done. And he's digitizing the entire economy. First of all, by getting digitized identity cards for everybody, so money can be transferred directly to bank accounts, even to the poorest people in the country. But this takes time. I call it the United States of India, because you have all these states many of them with different languages, both written and spoken languages. So to unify this country is quite a job, but still the opportunities are there because you have a lot of very smart people. And as you say, it's the most populous country in the world now. We figure about 1.2 billion people compared to, I would say, now India's bigger than China. China may be 800 to 900 million. Well, gold is a favorite of mine. I believe everybody should have some gold, maybe 10% of the portfolio, regardless of where the price is at any point in time. It's good at dollar cost average into gold. As regards to crypto, it looks like the U.S. is bound to become a leader in crypto, and that is going to be very important going forward. I personally am not a big fan of crypto, but members of my team are convincing me that we've got to do more in crypto. So we're looking at it more carefully. I'm particularly interested in the crypto exchanges rather than the
Welcome back. Well, the markets are doing well, but one stock that's under pressure is actually Muthoot Finance. You pull up the stock, it's actually virtually at the low point of the day. What's weighing on it? One was the conservative guidance that the management laid out of around 15% AUM growth. The other factors on valuations. It currently trades at around 2.8 times core book value. On an average, it's traded at around 2.4 times. So it's a little bit more expensive than what it had been in the past. And gold prices have come off a little bit from the recent peak. But all this together, the stock is under pressure despite reporting fairly good set of numbers. Well, earlier today, we spoke to the management, the managing director, Mr. George Alexander Muthoot. He spoke about the impact of gold price volatility and also how does he see the business evolve. Let's listen in to an excerpt of that conversation.
There are always fluctuations in gold prices. Maybe goes up, goes down. But over the last years, it has always been going up only. But of course, in the last 6 to 7 months, it has gone up too high. Probably it may cool down a bit. But of course, we give only 75% of the current value. And that also is a 30-day moving average. So today, if you look, our gold loans advance which are given, it's only 62% of today's price. If you look at the value of the gold we have with us and today's gold price, it's only 62%. So that is the margin or the headroom we have. So some corrections in the gold loan will not be affecting us. We have been maintaining our spread. NIM should be about 11%. Spread should be in the 9.5%. I think in the last 4 or 5 quarters, our spread has always been 9.15. And we actually maintain it. If the cost of funding goes up, we try to absorb it for 1 quarter or so. Afterwards, it's still going up. We increase our yield, but we maintain our spread. The same thing if the cost of fund. Today, the cost of funds is coming down a little. So it will take for a few months for it to maybe stabilize. If it is really coming down, we will reduce our yield. but maintaining our spread. So if there is an advantage in the borrowing cost, we pass it on to our customer. That is what our NIM and spread, etc., have been almost constant in the last several quarters.
All right, that was Muthoot Finance. Amrish, Muthoot, any interest? And then since we are ending, let's end with some food for thought. Jubilant FoodWorks, Westlife, some interesting numbers have come. And at least for Jubilant, it's not been such a bad quarter. Any interest?
No, when you talk of Muthoot, I think the valuation is quite high, and I really don't expect the performance to improve further from here, at least in the near future. So I think the best is priced in, and you're seeing the gold prices coming down, and we've seen a lot of pain at the bottom of the pyramid as far as the microfinance industry is concerned. So even in this case, we are seeing some amount of pain at the borrower end because these borrowers are just one notch above the microfinance sector. So I think one should be a bit careful as far as that is concerned. When we talk of Jubilant, I mean, despite the sort of results, I think what is going to affect them, or at least affect the sentiment, is about Turkey. So I think I think that would weigh on the stock at least for a while.
Any view on Amrish on Piramal Pharma? The numbers look quite good. The problem is the street was expecting more, it seems. In fact, Ekta spoke to Ms. Piramal earlier today, and she sounded quite optimistic. But the stock is down 4.5%. From the high, I think it's down 7.5%. Your take?
See, I mean, Piramal has done extremely well. If you see the last 12 months, I mean, like it's been a major outperformer. So clearly, I think the expectations were high from the analysts. So I think that's what is playing out. But I would say that in case it corrects further, say if we see levels of say about 190, 195, I think it's a good time to buy for a slightly longer term, because then we are looking at levels of about 250, 260.
Okay, what about Z Enterprises? The stock went down to 100 rupees. The promoter bought a little bit more. 3 days ago, the promoter bought again. The promoter holding is only 4%. Yeah. But when they go and they buy 16, 20 lakh shares, the street gets excited. Would you buy it at 127?
See, I mean, again, here there's the same story like VIP. I mean, if there's if there's a white knight, a new buyer comes in because the Sony thing was, I mean, clearly is out of the window. And when the Sony discussion was going on, we had seen the stock going to levels of about 250, 260. So, I mean, if we have a new buyer coming in at some point of time, maybe in the next 2 or 3 quarters, yes, I think that would be the only story which can take the stock up.
Okay, all right. Amrish, stay with us. We have a few more questions, but we'll address that in Markets Forward. For the time being, let's do a quick recap of today's trading action. Super trading session. 380 points on the Nifty. The Nifty Bank, it found its form today. It was up close to around 550 points. What did well? Well, autos did pretty well in today's trading session. You had Tata Motors that was up close to around 4.5% in trade today. You had Hero MotoCorp as well that was up close to around 6.5%. So those are the top gainers from the auto pack. JSW Steel as well, twinkling away. Remember when that Bhushan Power and Steel order did come in, that it could be up for liquidation. The stock had corrected to around 950 rupees. Guess what? It's recovered all of the losses that we've seen from that day. And today, in fact, it was up close to 5%. Trent as well seems to be finding its way up. It was up 4%. Grasim up close to around 3%. What was losing out from the Nifty pack? Only Innocent Bank, that too mildly in the red. There was a big party, though, in the broader markets. A lot of stocks up and about. Vascon, solid number, stock up 13%. Tilaknagar, solid number, stock up 13%. Kochi Shipyard up close to around 7.5%. Big move is what we saw there. Sugar-related stocks, Sri Renuka, Bajaj Hindustan, both of them up. Nalco saw a sharp correction in line with what alumina prices saw from around $800 per ton. Alumina came down to around $330 per ton. Now it's around $370 per ton. So Nalco is participating as well. Big up move is what we saw out there. Stocks that come in for selling post their numbers. We had Piramal Pharma, Muthoot Finance, as well as Jubilant FoodWorks. All three of those stocks were actually underperformers in trade. Nonetheless, a solid trading session. Headline index did well, while the broader markets, today for a change, did a relative underperformance. We slip into that short break. We wrap up on closing bell, but you stay with us because Markets Forward comes up next.